Hello, everyone, and thank you for joining today's True Trading webinar. I am excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer: True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as a Forex analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the today's session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. So we're going to take a look at some important Forex financial news events based on last week financial data. So first one is the final services PMI in Europe. The second one is the unemployment rate in Switzerland. Let me start with the first one. Final services PMI in Europe. Let's do the market overview. So what is final services PMI in Europe? Final services PMI reflects economic activity in the Eurozone services sector. It is based on surveys of purchasing managers across industries such as finance, retail, and hospitality. It confirms earlier preliminary estimates and provides insights into business conditions, including new orders, employment, and output levels. Usually, a reading above 50 signals economic expansion, and a reading below 50 indicates contraction. A higher than expected reading usually supports the euro, and it provides a strong signal and strong economic activity, which can push the price of euro USD to the upside. A lower than expected reading may weaken the euro. It suggests weaker economic conditions and can push the price of euro USD to the downside. Now, the event details. On May 6th at 8 a.m. UTC time, the previous reading was 47.4, forecast 47.4. Actual number we got is 47.6, which is just 2 points greater from the previous number and the forecast level. The currency pair we're going to focus is the Euro USD currency pair. Okay, give me a second. I have to open up a price chart over here. Okay, this is the price chart. And let's go over to the euro dollar. Okay, so the previous reading was 47.4 and the actual number we got is 47.6. That's the result. This was slightly above expectation, although still below 50, indicating contraction in economy. The improvement showed a modest recovery in the services sector. The price of Euro USD moved higher after the news release. Let me show you the price chart. So over here, this is where we got a big body candlestick over here with a long tail of a candlestick up here. And you can see right now the price of euro dollar is trying to move sideways. It might drop a little bit, but this is what happened. Market moved up, a bullish price action. That's what we got. So market reaction was basically that Euro USD moved up after the news release. Buyers entered into the Forex market. The slightly stronger PMI reading improved the euro sentiment and suggested that economic conditions were stabilizing compared to expectations in the Eurozone area. The upside move reflects short term bullish sentiment for the euro. The key drivers behind the move. Let's discuss that. The actual PMI number we got is 47.6 and it is above than the forecast and the previous level. Improvement in Eurozone services activity, reduced downside concern for the euro, positive short-term market sentiment. Now let us take a look at technical and sentiment considerations. Euro USD showed bullish movement after the news release. Short-term sentiment turned positive. Buyers dominated during the reaction phase. However, the broader trend still depends on US dollar strength and macroeconomic data. As far as the trading outlook is concerned, the short-term bias is obviously bullish or somewhat sideways. The euro gained support after the news release. Further upside depends on continued positive sentiment and US dollar weakness. So a good idea is to watch out for pullbacks as short-term profit taking may occur. Price did go up, but a good idea is to wait for a pullback first. That's usually happen, and then look for maybe somewhere around this area, look for another bullish leg in euro dollar currency pair. So market focus will now shift to upcoming US economic data. The overall analysis and key takeaway is Eurozone Services PMI came at 47.6. This was slightly above the 47.4 number. That was the forecast. While still in contraction territory below 50, the improvement supported the euro. The price action of euro USD moved higher as market sentiment improved. Final key takeaway is the previous reading we got is 47.4, forecast 47.4, and the actual result is 47.6, which is slightly better than expected PMI, and that was the main reason that it supported the price action of euro dollar. So euro USD moved higher due to improved short-term sentiment. Next important financial news event to discuss is the unemployment rate in Switzerland. So what is unemployment rate in Switzerland? The unemployment rate measures the percentage of the total labor force that is unemployed and actively seeking employment in Switzerland. It is a key financial indicator of labor market health and overall economic conditions. Lower unemployment suggests a stronger economy. It can support the Swiss franc and may push the USD Swiss franc lower. Higher unemployment rate may indicate economic weakness, and that could possibly weaken the Swiss franc and may push the price of USD Swiss franc to the upside. A lower than expected rate typically strengthens the franc. A higher than expected rate typically weakens the franc. Now, as far as the unemployment rate numbers are concerned, the previous reading was 3.0%. Forecast is also the same 3%, and the actual number we got is also 3%. Now, if you take a look at a price chart of US dollar Swiss franc, which is currently trying to rise up over here, right over here, you see. So over here, we got the news announcement and the price of US dollar Swiss franc. If we take a look at May 7th, we got a bullish rally in USD Swiss franc currency pair on May 7th. Okay. So the market reaction analysis is that the price of USD Swiss franc moved up after the news. Buyers entered the market. The labor data was unchanged, and there are some other factors involved that push the market to the upside. For example, weaker Swiss labor market conditions, reduced strength in US dollar Swiss franc demand, positive impact on US dollar CHF. Technical and sentiment considerations. The price of USD Swiss franc showed bullish movement after the news release. Short-term sentiment turned positive for US dollar Swiss franc. The trading outlook is obviously short-term, it's bullish. So USD Swiss franc remains supported after the release. If we take a look at this trend line over here, a market tries to close bearish candlesticks below this trend line, but it kind of turning into a false breakout. Further upside depends on continued Swiss franc weakness or US dollar strength. Watch out for pullbacks if traders take profit after the spike. Market focus may shift to upcoming US economic data and risk sentiment. Overall analysis and key takeaway is the Switzerland unemployment rate remains the same at 3%, and the forecast was also 3%, and the previous reading was also 3%. So there's no new change over here, which is kind of a good sign. And some people also consider it as a bad sign as well. However, the price of USD Swiss franc moved up. Next, let us take a look at previous week global market trends, and I am going to take a look at Euro USD and USD Swiss franc currency pairs. So if we take a look at a price chart of Euro dollar, this is the weekly time frame. The trend is bullish over here in Euro USD currency pair. Next, in daily time frame, this was a kind of a trend line break, and market tries to retest this trend line. And as of today, the price of Euro USD is trying to drop over here. Even in 4-hour time frame, we can draw new trend lines. So the way market is behaving, it's quite possible that a break of this bullish trend channel is probably going to push the price of euro dollar to the downside. If market is going to bounce from this channel, then we might get further upside over here. Regarding the US dollar Swiss franc, the overall trend is down in weekly time frame. Inside daily time frame, the trend is somewhat bullish over here. Next is the 4-hour. 4-hour is trying to find support over here. So this looks like to me market wants to go up over here from these current lows. Next, let us take a look at current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the GDP. GDP means gross domestic product, month over month in United Kingdom. So these are the current week, also known as upcoming important financial news events, as today is May 12th. So we are going to discuss May 14th and May 15th financial news events. So let's start with the first one. GDP, M over M. M over M means month over month. GDP, also known as gross domestic product, M over M measures the monthly change in goods and services produced in United Kingdom economy. It is one of the most important indicators of economic health and reflects overall growth or contraction. The data includes output from key sectors such as services, manufacturing, and construction. A higher than expected reading shows stronger economic activity and usually supports the British pound, which can push the GBPUSD higher. A weaker reading signals slowing growth and may put pressure on the British pound, leading to downside movement in GBPUSD currency pair. Now let's discuss about the financial news event. The previous reading 0.5%, forecast is actually minus 0.1%. Actual data not yet released, but it is going to be released on May 14th at 6 a.m. UTC time. Now, let me discuss market context and pre release expectations. The previous GDP reading was 0.5%, indicating modest economic growth. However, the forecast has turned negative at minus 0.1%, suggesting expected economic contraction. This shift reflects growing concerns about slowing United Kingdom economic activity. Forex markets are pricing in potential weakness ahead of the news release. Currency traders will closely watch whether the actual data confirms contraction or surprises to the upside. A result above minus 0.1% may support the British pound. A deeper negative reading may weaken GBP and pressure GBPUSD lower. Now, why GBPUSD could move after this news release? There are key drivers for price action that includes actual GDP versus forecast in previous reading, signs of UK economic contraction or resilience, Bank of England policy expectations, US dollar strength, and broader risk sentiment. Market reaction to growth outlook might changes. Even small deviations from expectations can trigger strong volatility in GBP/USD currency pair. The technical and sentiment considerations. The price of GBP/USD currency pair may experience sharp price swings during the release. If we take a look at a price chart of GBP/USD currency pair over here, the price of GBP is actually kind of trying to drop over here. So this is a bullish trend line over here at the middle of the screen. So it's quite possible that GBPUSD is going to drop first, and then we might get some sort of a bullish rally from these lows. I will just come back on the price action on GBP chart a bit later. So market sentiment will depend heavily on whether the UK avoids contraction. US dollar strength may amplify downside pressure on GBP if the data disappoints. The upside potential for GBP USD is there if the GDP, the gross domestic product, comes above minus 0.1%, less negative or more positive growth. This may support the pound and push the GBP USD to the upside. The downside risk for GBP USD is there if the financial number, the GDP number, comes below expectations. This may confirm contraction and pressure on GBPUSD to move lower. So expect high volatility immediately after the news release time, followed by possible retracement moves. Overall analysis and key takeaway is United Kingdom GDP is forecast to fall from 0.5% all the way down to negative territory of minus 0.1%, signaling possible economic contraction. This marks a significant shift in market expectations compared to the previous growth reading. The actual result will be critical in shaping short term GBPUSD price direction. Forex traders should prepare for strong volatility around the news release. Final key takeaway is previous reading was 0.5%, forecast minus 0.1%, actual data not yet released, but it is going to be released on May 14 at 6 a.m. UTC time. Currency markets expects a slowdown. Currency markets expect over M in Canada, and we're going to focus on US dollar versus Canadian dollar currency pair. So, what is manufacturing sales? The manufacturing sales, M over M, meaning month over month, measures the monthly change in the total value of manufactured goods sold in Canada. It reflects activity such as machinery, transportation, equipment, and food production. The financial data is this financial data is an important indicator of economic demand conditions. A higher reading suggests stronger individual activity and supports the Canadian dollar, which can push the price of USD CAD to the downside. A weaker reading signals declining manufacturing activity and may put pressure on the Canadian dollar, leading to upside movement in USD CAD currency pair. The previous reading was 3.6%, forecast is 3.5, actual data not yet released, but it is going to be released on May 15th at 12:30 p.m. UTC time. Now, let me discuss market context and pre-release expectations. The previous reading was 3.6%, forecast stands slightly lower at 3.5%. This suggests expectations of a mild slowdown in Canada's manufacturing activity. However, the sector is still showing relatively strong momentum compared to typical monthly fluctuations. Forex traders will closely watch whether the actual result confirms a slowdown or shows stronger than expected activity. A reading above 3.5 may support the Canadian dollar, and a reading below 3.5% may weaken the Canadian dollar. The USD CAD direction will also be influenced by US dollar strength and broader risk sentiment. Now, why I think USD CAD could move after the news release at 12:30 p.m. UTC time on May 15. Well, there are key drivers for price action that includes actual manufacturing sales versus forecast and previous reading, strength or weakness in Canada's manufacturing sector, commodity price impact, especially oil supporting the Canadian dollar, US dollar direction, and global risk sentiment. Market expectations for Bank of Canada policy outlook as well. Even small deviations from expectations can create short-term volatility in USD CAD currency pair. Let me show you the price chart of US dollar versus Canadian dollar currency pair. Let's take a look at here. As far as the price action is concerned, if we go over to a daily time frame, the USD CAD is actually trying to rise up. And the way I see, it's probably going to move up more. We might not get a bullish breakout over here, but still looking for overall bullish price action in USD CAD currency pair. So the overall analysis and key takeaway is Canada's manufacturing sales is expected to ease slightly from 3.6% to 3.5%. This reflects cautious expectations of slower industrial momentum. The actual result will determine short-term USD CAD direction. Currency traders should watch closely for any surprise versus the forecast. Final key takeaway is the previous reading was 3.6%, forecast 3.5%. The actual data not yet released. Market expects a mild slowdown in manufacturing activity. USD CAD direction will depend on whether actual data comes above or below expectations, along with broader US dollar and oil market sentiment. Now, let us take a look at current week Forex market trends, and we're going to discuss the euro dollar first. So, here's a price chart of euro USD, and this is the 4-hour time frame. You can see price action tries to rise up over here, but we got these two long spikes over here. This is telling me sellers are trying to take control of this market, and price action did not manage to go above this area. You can draw kind of a zone over here. So this is kind of the zone over here. You see a spike in the market over here, another one over here, and we got some more spikes over here. So this is kind of a resistance area which is trying to push the price of euro USD to the downside. So we might get a drop in market of euro USD currency pair. Next one is the GBPUSD currency pair. The price action of GBPUSD currency pair. Well, the trend is up in weekly time frame, and in daily time frame, it seems to me we got a nice uptrend over here, and this is where market tries to show some kind of a tweezer top pattern over here. If I zoom in, go over to a 4-hour chart and move this thing. So right up here, this is the zone, a rejection over here, and this is telling me that market wants to show kind of a downward pressure or downside pressure is there, and the price of GBPUSD is probably going to fall more. Okay. Next, US dollar Canadian versus Canadian dollar. Okay, USD CAD. If I zoom out a little bit, the price of USD CAD is actually overall it's going sideways. So this was the high. We took out this high, but then market managed to fall. So over here we have the support. And this support is telling that USD CAD wants to go up. Next, spot gold, XAU USD pair. Spot gold, the trend is up in weekly time frame. And even in daily time frame, we're getting kind of a sideways price action and then further weakness. So this was the zone where I thought market is going to move up, but we got some nice support over here as well. So it's quite possible that price action is probably going to drop a little bit, and then from these lows expect further bullish price action in spot gold. Now I will take a few minutes for questions and comments, and if you have any questions or comments related to today's forex trading webinar, feel free to type them inside the chat box. I will be happy to answer your questions. So let me open the chat box and see. Okay, I see good morning. Okay, good day. Okay, the question is about oil technical analysis. Okay, let me see. Okay, here's the chart of crude oil, and let me change it to full chart. This is the candlestick. Okay, as far as the crude oil is concerned, it looks bullish. Okay, it's an uptrend over here. So the price of WTI crude oil, it looks bullish, and I expect further upside. The question was, can you teach us what are your favorite technical indicators? Well, maybe I would do that in a separate webinar. This webinar is about technical analysis and fundamental analysis. The question was regarding the XAU USD pair. I think I already answered that. The way I see the price of spot gold is probably going to drop first and then rise up more, at least on a short term basis. So my forecast is a little bit bullish in XAU USD pair. So let us review what we have learned today. We discussed about the GDP month over month in United Kingdom, and my focus was on GBPUSD currency pair. The next important financial upcoming news event that I discuss is the manufacturing sales in Canada, and I focused on USDCAD currency pair. EURUSD, GBPUSD, USDCAD, and spot gold. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free Forex trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, May 19th, 2026 at same 12 p.m. UTC time. That's all from my side for now. Have a nice day and goodbye.